So you found a condo or a townhouse in Prince George. The price looks good, the location works, and then you see it, the monthly strata fee. And you think, what exactly am I paying for? And what happens if the building needs a new roof? Those are the right questions to ask, because strata fees can make or break your monthly budget. And if you do not understand how they work before you buy, you could end up with a bill that you never saw coming. Today, I'm going to break down exactly how strata fees are calculated, what your money actually goes towards, and the one thing most buyers miss that can cost them thousands. Stay with me because this stuff matters whether you're buying your first place or adding a unit to your investment portfolio. Let's start at the foundation. There's a concept called unit entitlement. Think of it as your share of the pie. Every strata building calculates this number based on your unit square footage relative to the total square footage of the entire building. The bigger your unit, the larger your unit entitlement. And your unit entitlement determines how much you pay towards the building's shared cost every month. Here's an example. Say your unit is 1,000 square feet and the total building square footage including all units and common property is 10,000 square feet. Your unit entitlement is 10%, so you pay 10% of whatever the building's operating costs are for that month. That is the core formula. Simple math, but here is where it gets more important. Your monthly strata fees is not going to one bucket, it's going to two. The first is the operating fund. This covers your everyday building costs, things like landscaping, garbage removal, insurance on the common property, and general maintenance. These are predictable expenses that happen throughout the year. Your monthly fee covers these. The second fund is the Contingency Reserve Fund, sometimes called the CRF. And this one is the key to whether a building is well managed or heading toward financial trouble. The CRF is the rainy day account. It covers expenses that do not happen every year, but that every building will eventually face. A new roof, an elevator overhaul, parking lot repaving. These are the big ticket items that need to be saved for over time. A healthy CRF means owners are protected when the bill arrives. A depleted CRF means owners get hit with a special levy. And I will explain that in a moment because that is the part most buyers do not see coming. This is the part most buyers do not think about until it's too late. A special levy is an additional charge that the strata corporations can apply to all owners when unexpected expenses come up. Something that was not budgeted for, an emergency repair, a lawsuit settlement, a major infrastructure issue the CRF cannot fully cover. Here's what you need to understand. Every owner must pay their share. You can't opt out. Your share is calculated based on unit entitlement. So if the strata votes to do a $200,000 repair and your unit entitlement is 10%, you owe $20,000. That bill can land in your mailbox within 30 days of the vote. This is exactly why, before you buy any strata property in Prince George or anywhere in BC, you need to request what's called a Form B, the Information Certificate. That document tells you the current monthly fees, any amounts owing to the strata, the CRF balance, and any outstanding legal judgments against the corporation. And yes, if someone sues the strata corporation and wins, every owner is liable for their share of that judgment based on unit entitlement. That is not a risk you want to take on blind. Now let me clear something up about property taxes, because this one is one of the most common misconceptions I see with strata buyers. People often assume they will receive two separate property tax bills, one for their unit and one for their share of the common areas. That's not how it works in BC. Under the BC Strata Property Act, BC assessment rolls the value of the common property directly into the individual assessment of each property lot based on unit entitlement. What that means practically is you get one single property tax bill for your unit. That bill already includes your proportional share of the common areas built right in. So, you are not managing two separate tax obligations. You're managing one. It is simpler than people think, but it is still a cost you need to factor into your monthly budget alongside your strata fee and your mortgage payment. And here is something that gives you real insight into whether a strata is being well managed or not. At every annual general meeting, the AGM, the Strata Corporation is required by law to contribute minimum of 10% of the total operating budget into the Contingency Reserve Fund. That minimum exists to make sure the building is always a building with a financial cushion. If you pull the Strata meeting minutes and see that this contribution has been waived year after year, that's a red flag. It likely means the CRF is underfunded and a special levy could be coming. On the flip side, if the financials show a healthy CRF with consistent contributions over time, that is a building that has been run responsibly, and that protects your investment. When you are buying a strata in Prince George, whether that is a downtown unit, something in College Heights, or a townhouse in the heart, ask to see the depreciation report along with the Form B. The depreciation report is required every 5 years and gives you a full picture of the building's long-term repair needs and expected costs. And if you are buying a strata as a rental property in Prince George, all of this math matters even more. Your strata fee is a fixed monthly expense that does not go away. It comes off the top before you see any cash flow. And if a special levy hits, that's the capital expense that can wipe out months of rental income in one shot. This is why I always run the numbers with my investor clients before we submit the offer. We are not just looking at the rent to mortgage ratio. We are looking at the strata fee, the CRF balance, the building's history of special levies, and the depreciation report to see what repairs are on the horizon. A $1,500 per month rental unit can look great on paper, but if the strata fee is $600 a month and the CRF has barely anything in it, you are sitting on a real risk. Know the numbers before you commit. So here's the recap. Unit entitlement is the formula that determines your share of everything in your strata. Your monthly fee funds two accounts: the operating fund for day-to-day expenses and the contingency reserve fund for long-term repairs. Special levies are real and every owner pays their share, no way to opt out. Your property taxes come as one single bill that already includes your share of the common areas. Simpler than most people expect. Before you buy, always request the Form B and the depreciation report and build your fully monthly cost picture before you decide what you can actually afford. Buying a strata in Prince George is a smart move for a lot of people. Whether you are a first-time buyer looking to get into the market or an investor building a portfolio here in Prince George, you just need to know what you are getting into before you sign. Navigating the Prince George real estate market doesn't have to be stressful. I have a free seller's guide if you're planning to list, relocation guide for anyone moving to Prince George. But if you're looking to buy and want more tailored information, ask for my home buyers program. On top of the buyer's guide, I'll send you exclusive weekly videos and emails to walk you through the process step by step. Just comment the word guide below, tell me which one fits your situation, and I'll send the link right over. And when you're ready to actually look at homes or list your property, the easiest way is to call, text, or email. All those details are in the description. Thanks for watching, and we'll see you in the next video.